And while Japan carries on a scorching streak of global M&As, it appears not so willing to foreign takeovers. Canadian retailer Alimentation Couche-Tard has officially abandoned its record multi-billion-dollar buyout offer for 7-Eleven parent company 7&I Holdings. Now, this brings an end to its year-long campaign to negotiate terms for a deal, which what could have been the largest foreign takeover of a Japanese company. The Circle K owner, citing a lack of constructive engagement by the Japanese retailer for the move, it added that 7&I had engaged in calculated campaign of obfuscation as well as delays to the great detriment of the company and its stakeholders. Now, Couche-Tard says their commitment to not pursuing a hostile takeover remains. 7&I countered Circle K's accusation, saying it was disappointed by the decision and disagreed with their numerous mischaracterizations. It also pointed at significant changes in the global economy, exchange rates, and financing markets from the time when the proposal was first made, which could have affected the outcome. 7&I stocks closed down 9% in Tokyo. Its shares were up more than 25% since Couche-Tard's interest became public 11 months ago.
And Roland, you've been following the twists and turns of this deal, and this was, supposed to be a blockbuster deal. What went wrong here?
Well, analysts say that Couche-Tard tried the soft approach. It didn't work. Despite offering a massive 47% premium on its valuations and also agreeing to divest its U.S. assets in a public listing in the U.S., well, they never actually got any meaningful track with the 7&I management themselves. Instead, Couche-Tard, as I've said, would say that they were met with obfuscation as well as delays. What really could have sealed the deal would have been, some analysts say, constructive engagement, because even after they signed the non-disclosure agreement and also raised their offer, they came in with an offer, wasn't enough, they sweetened the offer, but still 7&I's board was never really on board. So some analysts are saying that Couche-Tard should have gone hostile instead.
So the soft approach backfired. They should have turned hostile instead, as you said. So could Couche-Tard have done anything else that's different to get this deal across the line?
Absolutely. I mean, this would have been a change in mindset. I mean, they needed to go in harder, faster. And the deal really shows that Japan is still very much resistant to any foreign company taking over a Japanese corporate. Remember, the Canadian convenience store owner had sweetened the deal, 47%. They were offering 2,600 yen per share. That's a 47% increase over the unaffected stock value. That would have valued 7&I between $45 to $46 billion. But, if Couche-Tard had taken that hostile bid situation, that means they would have taken their tender offer and presented it to all existing shareholders or rallied support from activist shareholders. This would have put pressure on 7&I's management, but they didn't do that because possibly they were afraid of spooking the local investors as well as the Japanese regulators. They didn't do this, so perhaps that's the reason why the deal failed.
And taking a step back, Roland, what does this episode really tell us about the broader climate for foreign M&As in Japan? Are we looking at a setback here?
Well, it's definitely a reality check. I mean, on the one hand, Couche-Tard did make an impression. I mean, 7&I's management were forced to appoint an outsider CEO. It was also forced to come up with a $13.5 billion share buyback scheme for its shareholders, and on top of which, possibly divesting all its U.S. assets in North America in a public listing. So it did make some impact. But at the end of the day, Japan's corporates are still holding on to the old power structures. What I mean by this is that it relied on a white knight. So it had a counter offer by the founding Ito family, the founder of the 7&I group, as well as teaming up with a trading house, Itochu. They came up with a counter offer in order to keep 7&I in Japanese hands. So that was one. And then the shareholders themselves, Japanese shareholders themselves, have to actually they prioritize legacy and control over shareholder value and market logic. So that didn't make sense to a lot of people. I mean, we're offering you more money. Why aren't you accepting it? And finally, they also didn't accept that poison pill strategy, which they would have actually sold their shares to existing shareholders at a bigger discount. That would have meant it more expensive for Couche-Tard to have sealed the deal. So all these factors into play means that the moral of the story for foreign companies wanting to come into Japan is that do it hard and fast or don't do it at all.